Digital banks in Singapore are offering more than just higher interest rates to acquire more customers. They're also ramping up offerings and services to help clients offset higher inflation. But analysts say it's uncertain if these new entrants can even offer up new banking solutions. Michelle Teo finds out if the digital bank business model can be sustained.
Open a bank account and get a free bag of rice. That was what Trust Bank offered. The digital bank is backed by Standard Chartered Bank and FairPrice Group. This promotion, along with rebates of more than 20% on grocery shopping, enticed more than 300,000 people to sign up for new bank accounts. They did so in just 3 months since the bank's launch. More than 10% of its users are over the age of 65, but none of its customers are using Trust Bank as their primary account just yet.
It is too early to talk about the deeper engagement of salary crediting and the other metrics. Right now, we are really focused on making sure that the clients are actively using the product, funding the accounts, and they are having daily active and monthly active users. Within the next couple of weeks, we are hoping to introduce a feature where customers who are our savings account products holders can now open a credit card from within their app using a few taps.
Over at GXS Bank, it's only allowing selected customers on its wait list. Successful applicants will get a 3% interest rate on their savings account. GXS Bank is backed by Grab and Singtel. The two non-bank players are not allowed to have automated teller machines to dispense cash or have physical bank branches. It's reserving a third of its client pool for millennials, platform workers and small businesses, and it wants to offer microcredit solutions for these customers.
If you upgrade your handset every 2 years, knowing that we are able to avail handset financing services to you as you upgrade your handset. When you're booking a ride to the airport, we're able to look at availing FX services to you so that you don't have to rush off to a money changer. Looking into 2023, we will continue to focus on managing cost of acquisition as well as the cost to serve in view of the inflation as well as rising cost of doing business.
One analyst says it will be challenging for such digital banks to turn profitable in 5 years, which is a requirement set out by the central bank, especially when interest rates are rising and a potentially more challenging economic climate next year.
People are not easily willing to change their bank account to somewhere else because it's sort of costly, because there's an issue of trust. So it's going to be hard for them to get the scale. Now, they need to start with niches where they can convince you that their value proposition is there. But most of the places where they're starting, here in Singapore or in other countries where this has happened, typically are places where margins are very low.
All eyes are also on C Group, which owns Shopee and Garena. They have started Marybank. C Group Chief Corporate Officer Yen Jun Wang has said some pilot programs have opened up for its Singapore employees, but offered no details on what these programs are. The Monetary Authority of Singapore expects these digital banks to start operations this year. But with 2022 nearly coming to a close, Marybank could potentially miss the launch target for the public.